What's up you guys, welcome back to the Fire Grind. My name is Daniel and in today's video we're going to be going over an update on some of the growth stocks that I talk about on this channel. So the few stocks that we're going to talk about today is Docebo, Lightspeed, as well as Facedrive, which I do not yet have a position, but there is some interesting news that came out about the stock and I know a lot of you guys have been asking me about Facedrive. So we're going to talk about this news and I'll give you my opinion on Facedrive stock and whether I'm going to be buying into the stock or not. So the first stock here that we're going to talk about is Lightspeed POS, and they've announced their public offering in the United States and they're going to be listing on the New York Stock Exchange or NYSE. And we can see the purpose of this IPO is to help fund its growth strategies. There isn't much detail given on what these growth strategies are, but I'm sure you could find them if you were to look at their previous annual reports or just their previous quarterly calls. You can see that they're going to be offering a total of 11.65 million shares. And if we were to multiply that by today's current price of roughly around $42, they'll raise a total of around $500 million. So we can see that the shares offered include 10 million from the company and 1.65 million from this investor here, which is a key shareholder. So actually, in fact, they won't actually get the total 11.65 million shares or the proceeds from that. They'll actually only get proceeds from $10 million. So if we adjust this, we'll see that they can get a total of $420 million from this initial public offering on the New York Stock Exchange. And that's assuming that they offer it at $42 per share Canadian. And this probably won't be the case. First of all, they're going to be offering it in American dollars. So $42 Canadian, if we check that right here, 42 Canadian to USD, we get roughly 31.83 US dollars. So if we were to go back to here and change that to 31.83, they'll get a total proceeds of $318 million USD from this. But typically when companies have a secondary share offering, they will lower the price compared to what it's already offered on the stock exchange to have these syndicate or these underwriters buy into it. Because why would underwriters buy millions of dollars of stock at the current market price when they know that issuing new shares does dilution to the company? So they're always looking for a discount on this, and I expect somewhere between a 10% discount on the current market price. If we look at Docebo, when they did their secondary offering, the stock price was trading roughly around $57, and the underwriters bought in for a total price of $50 per share. So that was a little over 10%, so we might see something similar with Lightspeed where they offer the shares to these underwriters at around $38 or a little bit less, maybe $36 per share. And we can see that this news was reported on September 9th, and as of today, when I'm filming this, this is September 10th right now. Another key thing here is that $1.65 million is being sold from one of the key shareholders. So this is one of the key shareholders. I believe this is a firm that's getting rid of some of their position in Lightspeed. And that's probably because they've already made a killing on their Lightspeed position, because they probably got in early on before the company even went public. Now, if we jump over to Finbox, which is one of my favorite tools for looking at earnings and just seeing the growth quarter over quarter. So we can see here that Lightspeed's been growing at roughly around 34% in the early days, and recently it's been growing at around 70% or 60%. The latest quarter was 50%, but that's probably because of COVID, and this quarter was also slightly impacted by COVID, so maybe they could have even grown at 80% if COVID did not hit. So this business is clearly growing their top line. However, if we look at the gross profit margins, we can see that these are actually sort of declining year over year. It started off at around 70% in 2017, and since then it's dropped to around 60%. So that might be one of the risks going forward for Lightspeed if you're looking to open up a position here. If we look at their balance sheet here, we can see their cash and cash equivalents, and the trend seems to be going up as they are getting more and more cash. And with this new public offering in the US, they should have more cash in the bank. They should be able to more than double their cash position. So this puts Lightspeed in a good cash position, and I think what they're going to do is use this cash to actually do some more mergers and acquisitions. I read an article earlier today on Lightspeed saying that there's roughly 190 different players out there in the point of sale space. So right now the point of sale space is still in its early stages, and typically in an industry when it's in its early stages, we'll see a lot of consolidation. Until we see a lot more consolidation, we don't know who the clear winners are going to be here, but we know that Lightspeed has a pretty good position in this because they're one of the only few companies that are public that have a point of sale system. Other companies out there like Shopify as well as Square, And I don't know if PayPal has one, but they may have one coming up. So these are the 4 big players that I know of that are in the payment space right now. But despite Lightspeed being the smallest one out there out of these 4, they're still pretty massive compared to the other 186 or so competitors that they have out there. So this cash raise of around $420 million Canadian can be used towards acquisition of other smaller players out there. Now, if we turn to the charts of Lightspeed, we can see that they recently almost hit new all-time highs. However, their last all-time highs were actually in 2019 in August, so roughly a year ago. Recently, they had a price of around $48 per share, but since then have come back down, and that's because of the general broader market correction that's happening right now, where we saw Tesla, Apple, Google, Amazon all decline anywhere somewhere between 10 to 30%. If you're looking to get into Lightspeed right now, I probably would not recommend it. I would wait until they set the price for the New York Stock Exchange offering, and that will give you a good price target for when to enter Lightspeed. Just like Docebo, when Docebo announced their secondary public offering at $50 per share, the stock sharply declined from $57 all the way down to $50 and held steady for a couple weeks. If you guys are interested in some of the tools that I use, I have them down in the description below, and one of my favorite tools is actually Finbox, and it's completely free to use, so you can sign up with the link down below if you're interested as well. And if you want some quick news snippets about what's going on in the economic world, you should definitely consider signing up for Morning Brew. And I have that in the description as well, and again, that service is totally free for you. So I read Morning Brew every single morning just to see what's going on in the economy, and get an idea of where we're headed in the stock market in the day. Now let's turn our attention over to Facedrive. So if we look at the Facedrive stock chart here, we can see that Facedrive has actually been on a fairly significant dip from its all-time highs of around $28 per share. That was back on July 13th in 2020 this year, and it's actually dropped below its 50-day moving average. And we can see here that the RSI has hit levels of 41 and even dropped as low as 30. So if you're an investor looking at the technical analysis for Facedrive right now, you might think that the stock is fairly cheap. We can also see that the MACD is starting to flatten out and may have a crossover and send Facedrive stock right back up. My personal opinion on Facedrive right now is that I don't foresee it going above its 50-day moving average, especially with the latest news that came out. And this news has to do with Uber. Uber just declared war on Facedrive stock, and basically what it's doing is Uber entered the market for eco-conscious ride-sharing. And this is basically the whole MO of Facedrive. They're trying to use their platform to promote green ride-sharing businesses, so people driving hydrogen cars or electric cars. And if you use those services, they're going to be planting trees to help offset that carbon footprint. Uber has now caught up and made a massive announcement about improving sustainability across its global fleet yesterday. So the company will be investing around $800 million USD or $1 billion Canadian to ensure its entire fleet was electric by 2030. So this is a massive amount of money that's being invested into improving sustainability across the Uber fleet. And if we look at Facedrive stock, the market cap of Facedrive is $1.5 billion. So essentially Uber is investing 2/3 of the market cap of Facedrive into making its business eco-friendly or sustainable. So this is probably not very good news for Facedrive. But on the other hand, this may make Facedrive a target for Uber because we can see that Uber is moving towards sustainability. So if Uber wants a good position in Canada and just not have to worry about development, they may just end up buying out Facedrive. And as a Facedrive investor, you may see some good stock price appreciation. However, it's not very certain right now if Uber is looking to acquire Facedrive, but it is a possible target of Uber's to acquire Facedrive. But that would mean that Uber would need to pay a premium for Facedrive, probably around $2 billion or a little bit more, and their budget for making the whole fleet eco-friendly is around $1 billion. So that's not exactly enough money to acquire Facedrive. So instead, they may take a stake in Facedrive, but your guess is as good as mine if Uber will acquire Facedrive. If you're interested in reading this article, I'll post in the description down below, as it goes a bit into Facedrive's moat against Uber, as well as a possible acquisition target Facedrive could be for Uber. Lastly, let's go into Docebo stock. So we're actually going to go into the charts straight away here. What's interesting about Docebo's charts right now is that the stock actually touched its 50-day moving average and bounced off of it on September 8th. So the stock had a sharp decline from around $55 all the way down to around $42 on September 8th before bouncing off in the following couple days. We can see here though that the MACD is continuing its downtrend and hasn't shown any sign of reversal. So personally, I would be waiting a little bit further to see what's going to happen in this pattern here, because this downtrend could continue on, and this could be a false bounce that we see here where it just goes up a little bit more and drops below its 50-day moving average. As Docebo has been a fairly hot stock recently, and it's actually run up from around $16 when it first IPO'd all the way up to close to $60 per share. That's a fairly significant run up for a stock that's only been public for around a year. I think for Docebo, we could see it trading between its 100-day and 50-day moving average. And for me personally, my average cost basis on Docebo right now is around $44 per share. And I'm waiting for the stock to maybe drop back to the $40 level before averaging in a little bit more. Another thing here from the charts is that we got fairly weak volume here today, where the stock tried to move up a bit more. So this tells me that investors are not willing to push the stock up anymore, and we may see some selling pressure continue on tomorrow. And this all kind of falls in line with the whole market correction that's going on right now, where we saw a lot of companies sell off, especially in the tech sector. If we look at some news for Docebo, they actually landed some sort of contract with Amazon Web Services. So for those of you guys who don't know what Docebo does, they have a learning management system which allows companies to post educational content on there for their employees to learn from. And especially with this whole work from home era that we're going through right now, the importance of education is all the more important to keep employees up to date on the practices that the company is focusing on, as well as the latest technological advancements and process improvements that are happening within a company. So we can see here that Docebo wins over the heart of Amazon Web Services. And what this means for Docebo is that Amazon Web Services believes that Docebo may have the best in-breed product in the niche learning management space. So for Amazon Web Services to sign with Docebo, which is only roughly around a $1 to $2 billion market cap company, this speaks volumes for this company's product. Because Amazon Web Services is roughly a $10 to $20 billion revenue generating machine for Amazon, and for them to pick Docebo is a huge deal. I think that this gives Docebo a lot of press with the larger tech companies out there that are looking for learning management systems, and they could eventually land a lot more bigger clients out there now that they have Amazon Web Services. And according to the official press release, this news was released on September 9th, and if you quickly want to pause the video here to read this press release, do so right now. But we can see that on September 9th, the stock actually rebounded a bit. After being down at around $44 on September 8th, it closed up at $46 on the next day on September 9th after this news release. So this is probably what ended up help pushing Docebo stock up for the next 2 days. However, because of the general broader market correction, we might see Docebo stock come back down, not because of what Docebo is doing, it's just because of the general market correction. If you enjoyed this video, please smash that thumbs up button, as it really lets me know that you guys like this kind of content, just quick news snippets on high growth stocks, as well as leave any comments down below for questions that you have, or just comments that you want to make on this video. As well as if you're new here, please hit that subscribe button as well as the notification bell for new videos that come out on my channel, as I do mostly talk about Canadian high growth stocks as well as some American stocks in the mix here and there. Keep up the grind and have a great day.